Okay, I've got 133. In the interest of time, we're going to go ahead and start the Valorem Subcommittee of Ways and Means. David Knight's the chair, and he's if he comes in, I'll step away, but we only have one bill, and that's House Bill 931. Representative Cantrell, can you present your bill? Okay, well,
I can talk through it. Because apparently it's not ready quite yet. This is hearing only, right?
yeah, it is hearing.
Okay. So I will commit to you. I'll get it fixed between now and the next time. No, that's the first sub. Thank you, Mr. Chairman, committee members. A lot of the things that I've tried to advance down here since I've been elected have been constituent concerns. And at my church, we have a large ministry to people with who are disabled. And so a family moved recently into our community and joined our church. And she has two daughters who are in wheelchairs. And they moved from Puerto Rico because of the hurricane. And so when she went to get the tag for her wheelchair accessible van, and she was charged the TAVT tax, she was just surprised because in Puerto Rico, they don't charge that. And for a single mom, it was a big burden. And so she called me and we got talking about it. And I thought, well, maybe we could address this concern. So what the bill does, we already have a TAVT exemption for military folks who are disabled. And what this bill would do is it would add another category to anybody who's either the owner of the vehicle is disabled and or one of their dependents is disabled to the point where they need am I doing something wrong? They need a wheelchair accessible van. And the reason that I have a sub, and it's completely my fault, is because I'm up at 3 a.m. this morning reading the bill and noticed that I had overlooked an important detail. And I don't know how it got written the way it got written, but it wasn't written for a wheelchair accessible vehicle. It was written for a vehicle that had to have hand controls. And hand controls are not that expensive. I don't think it would be smart to, do a TAVT exemption for just hand controls. That's just a few $100. But for someone who's got to purchase a van where typically the van is $30,000 and then it's a $30,000 customized, customization that has to take place to that vehicle to make it where they can load their wheelchair inside the vehicle. It's a big price to pay. And the suggestion has been made, and I want to go ahead and talk about it, about, well, why don't you just exempt the customization part of the purchase? The thing is that folks who are disabled already have so many more expenses than we have, those of us who are not as disabled already. And it's likely they wouldn't even be purchasing this kind of van, were they not disabled in the first place. So it kind of goes together. So my ask in my bill is to give them a TAVT exemption for the entirety of a purchase of a wheelchair accessible van when the owner or a dependent of the owner is confined to a wheelchair. We put some protections in there to make sure, that a private business could not use this, and an owner can only get this exemption every 3 years at the most. So they can't just keep turning around and buying another vehicle. And if they sell that vehicle to a private company, then the exemption would not be the case. So the next purchaser would pay the TAVT tax on the vehicle.
So again, I'm standing in for Chairman Knight, who's typically chairs this committee. Thank you for the presentation. Do we have any questions from the members of the committee? I hope we do.
Mr. Chair, I had a couple more things that I thought of while you were talking just then. I worked with DOR to made a couple adjustments to it. My first sub was two things they asked me to work on. That we moved the effective date to January of 23 to give them a little more time to make that adjustment. And the original bill had some kind of complicated things with the title and stuff to try to protect from something being a vehicle being sold and resold and that kind of thing. And we figured out an easier way to do it by just saying that you're only eligible to do it once every 3 years. And then the sub that I'm waiting on that the guy's been working on since this morning was to make sure it was wheelchair accessible vehicles, not just a vehicle that with hand controls.
And was there a fiscal note on this bill?
Oh, that's the other thing. Yeah, I'm glad you mentioned that. So I asked DOR if they had any records of, how many vehicles were being purchased this way each year. They did not. So I went to a national organization and had to do some extrapolating. So it's not exact, but it appears that we're talking about 200 vehicles a year. So you're looking at usually about $1,200 per vehicle. So you'd be looking at, 200,000, somewhere $250,000 to 200,000, $250,000 in cost.
Members of the committee, do we have any questions, comments? This is hearing only, so, but let's flesh it out, make sure we understand it. And what will the substitute do again? It's not in this language.
I had a mistake in there. It's completely my fault, but he wrote it where the TAVT exemption was for vehicles with hand controls.
Okay, that, right.
And that was not my intent at all. It was because the big expense obviously is customization to make it wheelchair accessible.
All right. What mic are you at? Okay.
I'm sorry if I missed it. I walked in a little late. I was in another meeting, but is this in place now, or is this just something brand new that I know you recommended, or you talked about that the handicapped or wheelchair accessible have a lot more costs, and I certainly can empathize with that. But do we have something like this in place now in the state?
We do for disabled veterans.
Okay, but not for
just
everyone
anyone with a disability. And so this would add that category, and it provides for, you have to provide proof, the same level of proof that the disabled veteran has to provide. It just basically adds a category to that
And that
existing
would be with
code.
the county office of each said county.
Correct.
No, sir.
Okay, thank you, Mr. Chairman. Representative Cantrell, on line 38 and 39, the language provides that the exemption does not apply where the vehicle is acquired or intended to be used for commercial purposes. What if after the purchase is made, the handicapped person decides that this is something that he can do to help cover some of his expenses?
Well, that's a great question. I guess that would be possible if someone wanted to do that. I guess I don't know how you'd close. I guess you'd have to write the bill to actually absolutely prohibit it. And I don't know that the bill tightens that loophole. It might be something I could address in the sub.
Yeah, or because later you provide that if something happens, then I think they have to pay back a portion of the exemption. Is that right?
I think we took that out.
Oh, you did?
Yeah, that was part of it. It was kind of cumbersome in the original.
Okay.
And so we decided to go with the every 3 years to try to mitigate that. They could only to try to keep somebody from being able to, just keep doing this over and over again. And remember, if they did sell it, the new purchaser would pay the TAVT at that point.
Do you think that we could try to work on some language that could provide a payback if the person did start to use it for business or exemption?
Yeah, I think we could do that. Is Mason in here? You think that's something we could do? Yeah. Okay.
All right. Thank you.
Thank you, Chairman Rich. It prompted a question for me, and I'm struggling to get through this bill. Would it be in the rules and regs about how you verify the handicap or the fact that someone needs this kind of bill?
It's the same standard as it is for the disabled veteran. The proof of I don't know if it's a doctor's note or some kind of form that has to be an affidavit that has to be filled out. We tried to tighten that up to make sure, because it's sad to think that somebody would do that, but we know there would be somebody who would do it.
They're bad actors out there, but
yes, there are.
Not same thing about this particular situation. Any further questions for members of the committee? Hearing none, I think Clint Mueller with the ACCG had signed up to speak.
There you go. Thank you, Mr. Chairman, members of the committee. Clint Mueller with ACCG. Just a couple thoughts, and then I do have one recommendation. It's not a lot of money. I think our concern is just, again, more precedent. Where do the exemptions stop? In the reading of the bill, if you'll look in code section C right above it, that actually refers to first responders. I'm not sure where the veterans piece of it is. If the veterans are not in there, then maybe they will I'm sure they will be back next year asking for the veterans to be included, right? But right now, I think it's a first responder, and there is an aggregate amount. So you take the total value of all their vehicles and they get the exemption up to 50,000, but they pay the taxes above that. So it's not 100% exemption. So I think that's where one area where this is different. We're talking about 100% exemption, not just a partial exemption. Our recommendation would, and I understand the increased cost. My father-in-law is a double amputee and we have a van for him. So I do personally understand the increased cost for these extra pieces of equipment that you have to add to the vehicles, and they can double the value of the vehicle. So our recommendation is to try to address that and be more precise with addressing the additional costs. We already have a blue book value that's used on valuing lots of cars, which is a hybrid between the wholesale and the retail value. So it's actually a less than the retail value. If you were to use the blue book value on these vehicles, which is the value without having all the extra equipment on there, and it's lower, and it's be a little bit lower than a retail value, we think that would be fair, because that is, again, a manual that the OR has to keep, and they have to use it for all these other vehicles that are used vehicles too. And so that may be a way of giving these people a discount without completely providing a 100% exemption. I'd be glad to answer any questions if y'all have any questions of me.
My question is back to Representative Cantrell. You say the disabled military community already enjoys this same exemption that you're applying for. Well, frankly, if we do your version of the bill, then there's no distinction. They don't, unless there's some, I guess if they have to prove military service, they would no longer have to do that. It would apply to everybody under your version of the bill. But you said, Clint, that it refers back to first responders.
Mm-hmm.
What's that version? I understand you just said it was aggregate cap of 50,000, but is this specifically for disabled?
Disabled first responders, yes.
And obviously, again, Representative Cantrell, if his version of the bill went through, then that would pull them. It would be anybody disabled.
Well, this is actually amending that code section. It's basically saying you can take one of the two, but not both. So you're adding to the first responders, anybody that's disabled. They don't have to be a first responder, but they get 100% exemption versus an aggregate of up to a $50,000 exemption.
But didn't I understand you to say that the $50,000 cap, it does reply to the first responders?
That's just for first responders.
Reworking of this language takes that cap out.
No, it leaves it there and allows the person to choose. They can fall under either one. I would assume that most people are going to want to fall under the 100% exemption, unless they maybe have multiple. Well, I don't know about the multiple vehicles, because some people may have non-handicap accessible vehicles in their family that they want to exempt, and they would be able to capture that under the first responder provision, because it's blind to the type of vehicle. This change only applies to the vehicles that have the extra added equipment to allow the handicap accessibility of it.
Okay, so again, as I understand it, your recommendation would be to basically forget about what it costs to convert a van, even if you could, because conceivably you could buy it, then add all the equipment to it and
not pay the extra DAVT. That's correct.
Not pay it, but you'd be willing to. The ACCG thinks a reasonable compromise is just go to the blue book value of whatever the was that Kelly Blue Book or
well, I don't know the details. The Department of Revenue is required to keep these blue book values, and it's in the computer system that all the tax commissioners use statewide. But you just plug in the make, model, year of the vehicle, and it tells you what the value is, and those are values as those vehicles exist prior to doing any retrofitting for a handicap accessibility.
All right. Yeah. We're going to recognize Chairman Blackman.
Thank you, Mr. Chairman. If it's pleasing to the author, I'd be happy to maybe sit down. Just to have worked just a little bit on the
Yes,
TMT
please.
stuff, and there is a veteran component in here as well. It's not in the language that's in your bill,
Right.
but it's part of that section. And then, I think what we heard from ACCG is that, Clint was mentioning is kind of an average. It's, it's a value and average of the
Sure.
retail and the value. And it's, it's kind of a little bit of a formula that's worked in on TAVT, but sounds to me like there's some compromise to be had if that's reasonable.
It is
for the
reasonable.
author of the
I'd
bill.
be happy to do that.
Thank you, sir. Well, thank you, Mr. Chairman.
Thank you.
Thank you, Clint. Well, that sounds very reasonable. So
Okay.
does anybody else want to testify about the bill? Anybody in the audience? Any comments? Hearing none. The Ad Valorem Tax Committee stands adjourned. And,
Thank you,
I
committee.
guess we'll pick up. What we'll do next. Representative Newton coming or not? Shaw, have you heard from Martin Newton? You must keep. Well, he had me last, but okay, all right. Okay. Well, is it all right to go ahead and start this one there?
Yeah.
All right, well, we'll just go ahead and start the Income Tax Subcommittee of the Ways and Means Committee. Is, of course, now Representative Mac Jackson's got one. He's not here, so we'll have to wait till the authors show up. Is Representative Stevens here? We might have to wait a minute. Okay. Well, how about if I tell you all about my bill? So I'll kill a little bit of time. So who's acting chair? Chairman Rich, you gonna be the acting chair? Oh, well, thank you. So which one we got? I'm sorry, Vance, since you're subcommittee chair, why don't you do it? Sorry, Chairman Rich. Thank you for helping us get people here.
Fine. So, what's your bit?
It's-
We'll call a meeting to order, and we have Representative Williamson. He present a bill.
All right, thank you, Mr. Chairman. House Bill 1058. This is the second hearing of this bill, but in simple terms, it allows for any holding company that files a federal consolidated income tax return for all their operating subsidiaries will be able to do it without having to require permission from the Georgia Department of Revenue. All sides are in agreement. There's no objections to the bill. It will allow, simply allow Georgia companies that have holding companies that have multiple operating subsidiaries the flexibility to be able to file a consolidated state income tax return. Happy to answer any questions for the members of the committee.
All right. Anybody on the committee have a comment, a question? Anybody in the audience have anything? At this time, this is second hearing on this bill. This time, do I hear a motion? Is there a second? Any discussion? All in favor, say aye. All opposed, same sign.
I guess I can vote on my own bill.
Yeah. We'll take that vote. Sounds good. You're good to go, Representative.
Thank you, Mr. Chairman. And just for the record, the Department of Revenues has no objections to the bill, correct? Thank you. All right, we're still now going to have to hit a pause button here. Chairman Rich, we're missing Representative Mac Jackson, Representative Clay Perkle, and Representative Stevens, Chairman Stevens. All right, so we'll recess for a few minutes. So I will reconvene the Income Tax Subcommittee of Ways and Means and ask Representative Josh, Floor Leader Bonner, to present his bill, please. You can go to either one.
Well, good afternoon. Thank you. It's good to see some friendly faces. It's not always been the case this morning, but I appreciate seeing some friendly faces. So appreciate the opportunity to present House Bill 1302 to you today. 1302 is a great bill. It is an opportunity for the state of Georgia to return tax money to the taxpayers of Georgia. As Governor Kemp mentioned in a number of speeches, both the state of the state and some different speeches, this is an opportunity for us to give that $1.6 billion in surplus back to the taxpayers. So what I'll do, Mr. Chairman, is just kind of go over a few highlights and then take any questions that the committee may have. So under 1302, this returns the surplus to the qualified taxpayers. Would be those who filed individual tax returns for 2020 and 2021 taxable years. The credit would be $250 for single filers, $375 for head of household filers, and $500 for married couples filing jointly based on those 2020 returns. If a qualified Georgian's 2020 income tax liability is less than the amounts that I mentioned, then the credit will be to their 2020 tax liability. They will not receive a refund that is greater than their tax liability for tax year 2020. And this refund may be subject to set-off debt collections for payments owed to the state, such as delinquent child support payments. This tax refund will not be taxable income under Georgia law and will not accrue interest for the taxpayer. Again, as I said, this one-time refund will first be credited against the individual's liability, and any excess credit will be sent based on the refund instructions as they provide on their 2021 return. At this time, no action is required other than filing their 20 and 2021 returns. And we are working with the Department of Revenue as to the mechanics of this of the return, but we expect to have that information shortly. And with that, Mr. Chairman, that's the basics of the bill. I'll be happy to answer any questions.
Thank you, Mr. Chairman. What would be the timing of this? I guess after the governor's signature, what would be the timing of this? Does Department of Revenue know?
Well, so good question. That is something that we are working out with the Department of Revenue that, certainly we'd like to start delivering those checks right upon signature, but it will be a process, but we expect to have that information and completed here within the next week or so.
So just a quick question. So we obviously, you have to file a 2021 return, but did I understand you say you have to had to file a 2020 return as well?
That's correct.
Okay, so on your 2022 2021 return, do you have to claim this or not, or is it automatic?
It's automatic.
So there's nothing
that the tax filer has to do in terms of opting in, opting out, or making the request for this.
So for any returns that have already been filed up to this date, they're automatically correct. They don't have to do anything. There's no refiling required.
That's correct.
I've got another question, and this might be for I see Jonathan Feldman might have dialed in. Just out of curiosity, you said there's no state of Georgia income tax liability for this rebate. What about the federal government? Will there be federal income taxes due on this? Does anybody know the answer to that?
Our Austin is the policy analyst that worked on this.
Okay. Off it is. Awesome. I understand that John Foster with the Department of Revenue is on, or could the commissioner, do you think you could answer? Yeah, Commissioner Crittenden would be kind enough to make a stab at answering that question. My suspicion is it would be taxable income.
Thank you, Mr. Chairman. We imagine that it would be taxable federally, it won't be taxable here in Georgia, but federal.
But at the end of the day, it's income coming back into the taxpayer's pocketbook. Right, recognize is who's on number 3?
That's okay.
Okay, you wait. Any other questions? Members of the committee, anybody from the audience like to testify for or against this measure? It's frankly clear cut. It is a governor's priority bill, correct?
That's correct.
So if everybody's comfortable, Bill, chair be willing to entertain a motion. Do pass. And a second. Any further discussion? If not, all in favor signify by saying aye. Opposed, same sign. The measure passes unanimously. Congratulations, Floor Leader Bonner. And
Thank you, Mr. Chairman.
it's on the rules. Oh, hey. I ignored him. He's got to be here the whole meeting. Hey, Representative Jackson, thank you for joining us today. I understand you have a bill you'd like to present for the first time. It will be hearing only, but please give us tell us about give us the LC number and walk us through the bill, please.
Okay, thank you, Mr. Chairman. Please accept my apologies for being late.
You really.
I didn't know I was supposed to be here today. Thank you. I got House Bill 1039 working off LC 432153. And it's a tax bill for Class 3 railroads. And what we're doing is extending this tax credit. It was set to expire and we're extending it to 2028. And it's for Class 3 railroads. And my railroad company would really appreciate this bill. And that's the gist of it, Mr. Chairman.
Any questions from members of the committee? So I happen to know what a Class 3, I'm sorry, we do have a couple.
My question's boring. I want to hear what that is though, after I ask my question. So I see that your bill just changes the sunset to 2029. It's
Correct.
currently 2024.
Mhm.
Okay, so 5 years. You just, the 5 years was the original sunset and you're extending it
And we
5.
extended the sunset. Mhm.
Now I'd love to hear about what a Class 3 is.
I'm gonna recognize Chairman Dickey.
I was just going to ask you, share with the committee the name of your railroad.
The name of my railroad is Sandersville Railroad.
Okay.
Well, that changes everything. That's right. No. So for those of you that don't know, first of all, a little history on this. Representative Patty Bentley carried this bill for the first time through Ways and
did.
Meals several years ago and did a great job. But a Class 3 railroad, I like to say, is the fingers that feed into the there's short line railroads typically, could be anything from literally any minimum mileage of track of 10 miles or less to several hundred miles long or longer, but they're the fingers that feed our Class A railroads. And most of us know that the Class A railroads that serve in Georgia is CSX and Norfolk Southern. And a little bit of history on that is those railroads, because of the operating cost and their whole, let's just leave it at the operating cost, 30 or 40 years ago, started getting rid of their smaller lines. It just was unprofitable to operate. But
Correct.
again, these are fingers that came out in the communities like Sandersville, where
Correct.
that been operating railroad for a long time. And communities like mine, Monroe, Georgia, and others, and literally they dead end in our downtown now. They used to go all the way to Gainesville, Georgia. So it's really important for those businesses that have located along those lines, and offers economic development opportunities for new business to come in and build side tracks off those lines. So it's evidently the program's been working pretty well, and but that's a little bit of history about what a
And we
Class
do
3
have some
railroad
side
is.
rails too. That's how the kaolin gets transported in our community. We have side rails to all our kaolin plants.
So Chairman Rich, do you have another question?
Yes, I should have asked this before. Do you have any of the numbers on how this has performed in the 3 years that they've been getting the tax credit?
I don't, but I'll get it for you.
Okay.
Mhm. This tax credit came out of our Rural Development Council, and like you said, Representative Bentley carried it the last time.
So, okay. We just found a technical error in the bill,
Okay.
not substantive. Representative Jackson.
Okay,
On line 13, Ledge Council currently has this ending on or before December the 30th, 2023. But according to Mr. Groom here, Senate Bill 6 actually had changed that date to 2026. So it will, we'll need a committee substitute for the second hearing in order to extend the sunset date.
on line 13.
I'm looking at line 13, and if there's any other lines that refer to that. Not sure, but Ledge Council can go back to Senate Bill 6 that I put in law last year and be able to clean that up.
Okay.
Any other further questions for Representative Jackson? Chairman Rich, your mic, so you okay, you're off. Okay. If not, this is hearing only. Do any members from the audience wish to speak to the measure? For or against? All right. Thank you again for your testimony today. If you get that committee substitute to us, we'll be happy to look at it again next week.
Thank you, Mr. Chairman.
Thank you.
Thank you, members of the committee.
Representative Chairman Stevens, you ready to present your measure? Should be on.
Thank you, Mr. Chairman. House Bill 1053, LC 432161 is a simple extension of the current sunset set on post-production for films. It extends it out for another 5 years. It has a cap already in the bill of $10 million. No more than $2 million can be consumed by one particular or one single company. For those of you that might remember that's been here a while, in 2008, we were out of the business, and I put in a little film bill that has made us #1 in the world. We do more films than California, and it's turned out to be a phenomenal success. Your folks that are in SCAD and colleges that like to go into this type of business can stay at home and work for a change, to the chairman over here. So it's been a boom for the entire state of Georgia. Hundreds of millions of dollars since 2008 have gone into building things that we didn't have before, which was studios. And they're in all of our communities all over the state. And we've really got a groundswell, if you will, of places for our homegrown folks to do their profession. 2017, then I believe Governor Deal decided that now that we have the infrastructure, if you will, with the film tax credit bill, that what we were doing is we were making the films and sending the business back to California for post-production. This is where the big money is. This is where the folks that all of them make 100,000 or more, they're in the upper numbers. So we wanted to keep that business here in Georgia. So we created a short-term post-production income tax credit to get these people living in Georgia and doing everything from the beginning to the end of film production. And we finally got there. This bill is, again, only extends it, what we're doing today, for another 5 years.
And it's already still capped at $10 million per year.
Yes, sir.
Questions from members of the committee? Again, this is hearing only today.
Thank you, Chairman. It's
Sure.
more of a statement than a question, but this came through my committee before it came here, and I just wanted to reiterate the magnitude. You know, I'm a pretty big skeptic of tax credits sometimes, but the magnitude and the multiplier, if you will, on this post-production credit is pretty significant. We're talking hundreds of millions of dollars top line revenue to Georgia companies. So that 10 million that's capped really multiplies into the private sector.
You got a member of the audience here would like to share a few words. Let me know if you can hear me.
Where is he? So if you can let the members ask the questions first, and then we'll recognize you for speaking if you don't mind. All right, so I got Chairman Dickey.
Thank you. Mr. Chairman, this 10 million cap, do we know what it's costing now? How close do we are this cap now? And if it hits the cap, do you prorate, or it's the first to claim, or?
It's the first to claim, and it's also capped at, for example, if a company comes in and a large company, and I won't use any names, but we got some that do a lot of post-production. They're also to make sure that they don't gobble up the whole 10 million. It's used every year, that we cap them as a maximum per company at 2 million, so that everybody gets a little taste of the pie, if you will.
Good, thank you.
Any other questions from members of the committee? Hearing none, I think we have moonshine post-production via Zoom. If you'd join us, feel free to join us. Please tell us your name and again, the company you're with.
Yeah. Hey, thank you, Chairman. Thanks, committee. Thanks for your support of the industry. I'm Drew Sawyer, founder and principal at Moonshine Post. Proud member of the Georgia Studio and Infrastructure Alliance. I'm also a Georgia State alum, Georgia native from the Rome and Cedartown area. Still have family in both those towns. And I am part of that homegrown phenomenon that somehow turned his Rome High School student news accreditations into a national brand and a film and television company that's reaching international clients. Sometimes with popular work and sometimes with less than popular work on the big and the small screen. I founded this company about 8 years ago, and we've been continuously growing in size and revenue every year. We've continuously expanded our offices. We're doing that again in 2 months. We bring on new hires. We use this we use this incentive as a vendor every year to double down on Georgians. We've put Georgians to work, not just full time for us, but in over 100 episodes and features, feature films. And we continue to even help train the workforce alongside Georgia State and the Georgia Film Academy. And several of those are actually full-time hires of ours. Traditionally, Georgia has always been looked at as kind of a production-only pit stop. But this bill has really made it possible for vendors like myself to help turn the light bulbs on in our clients' mind, the studios, the networks, and actually let them look at us as a true full circle post-production destination so they can one stop, shoot it, cut it, go to the screen. And that's maximizing those dollars that they spend here. If they're going to shoot it here, it only makes sense to stick around and spend the maximum amount of money. And those are creating jobs that, you're looking at it. I've got my full-timers. These are high-paying tech jobs that wouldn't otherwise exist. And so this bill is it's the linchpin and really completing the next phase in building out this industry and capturing more revenue for the state. So I'm pro bill. So thank you for your time.
Thank you for your clarification and educating the committee. I've got a quick question as chair. Where's your headquarters located? Are you in Atlanta or?
Yeah,
Raleigh?
headquarters in Atlanta, right across the street from Ponce City Market.
Awesome. So you're pretty close. Any questions from members of the committee? Is anyone else from the audience want to testify for or against the bill? And this was hearing only today. Representative Carpenter enjoys a great deal of confidence of the members of this committee. At least I know I appreciate his insight. And obviously this is, bill's working as intended for delivering taxpayers of Georgia a good return on the investment. So thank you for your taking the time of testifying today. And there be no further questions about this bill.
Thank you very much for your time.
We appreciate the opportunity to hear about it. So thank you, Chairman Stevens.
Yes.
The next bill we have is Chairman Perkle's bill. So I believe you have House Bill 1041. If you'll read your LC number, Chairman, and walk us through the bill, please.
Thank you, Mr. Chairman. LC 43-2188. This is House Bill 1041. The last speaker was exceedingly good and wasn't a politician, but he threw in both Cedartown and Rome to the members of the committee. And this particular bill is actually good for most all of your districts. This bill is increasing the rural hospital tax credit from $60 to $75 million. It's a pretty simple bill. I can't think of a single piece of legislation that we have passed. There might be that has had more of an impact in keeping rural hospitals open. I know for a fact it has kept several rural hospitals open because of your generosity and the forward thinking of this committee and the members of the House and Senate in passing the initial legislation. We have this. So to answer one question that will be coming up next, was it fully subscribed? And the answer is yes and no. It was 59,964,018. But people were turned away. There is a lag between when you request the Department of Revenue to allow you to subscribe. There's a 6-month lag before you the end of the fiscal year for you. So it was fully subscribed, and this additional $15 million would be exceedingly well received by rural hospitals.
Again, this is hearing only on this bill today. Do we have any questions from members of the committee?
Mr. Chairman, it does come as a recommendation from the House Rural Development Council.
That's good to know. I do have a question because having never participated in this particular program, and I can't recall, are the contribution limits either individually or business?
Yes, sir, both. So the contribution limits, individuals 5,000, 10,000, married couple. For a pass-through entity, it is up to 75, or C Corp and pass-throughs up to 75% of their tax bill. And for an LLC subchapter S from individual entity, it's limited at 10,000.
Now, what's the difference? So in any pass-through entity is limited to 10,000.
Well, there is a carve out. I shouldn't say a carve out, but for C Corps and a fully pass-through, it's limited to 75% of their tax liability.
Without a cap?
I don't think there's a cap on that. No.
You kind of lost me when you said were you saying the S Corp's got a cap on it of 10 grand?
Yeah.
What in the world's the difference between the tax structure of a S corp?
C corporation trust or pass-through entity paying at the entity level. So it's mainly going to be C corps. It's up to 75% of the tax liability. For my S corp, or perhaps it's your S corp or LLC, that is a pass-through to us and not paying at the entity level. There is a cap of 10,000.
Is Jonathan Feldman still with us?
I'm on, Chairman Williamson.
Hey, I've got a question for Jonathan Feldman. Jonathan, identify yourself and who you're with real quickly for the members of the committee, and I've got a question.
Yes, I'm a lawyer, a partner in this state and local tax practice at law firm Evershed Sutherland.
Jonathan, my question about this bill is that sort of like House Bill 149 that we allowed state and local taxes to be paid at the entity level last year. I'm getting a little bit lost on why there'd be no limit if you're paying 75% of the tax liability on some of these pass-through entities. There would be a limit of 10,000. In particular, I think that Chairman Perkins was saying an S corporation,
LLC partnerships that we think of as pass-throughs, that we're taxed on our individual basis, that are not paying at the entity level, like the C corp at the 35% or whatever.
and I guess my question is, and maybe it's for the Department of Revenue, did the House Bill 149 allow us to pay that at the entity level? Am I all right?
So here's my
Wait a
understanding.
minute, Chairman Carpenter, what are you, 7?
This is my understanding. So yes, we can pay. So Oakwood Cafe pays, it's just like the school credit. This is just like the school credit. If I take that $10,000 and pay it through the restaurant, then I actually take the credit on my personal return, but I'm paying it through the restaurant. Does that make sense? So you can pay it through the restaurant, but the C corps, usually banks, a lot of banks are C corps, right? And so a
lot of businesses are
well,
C
but they
corps.
pay directly to the state of Georgia,
right?
and so they can, if they owe the state of Georgia $300,000, then they can deduct 75% of that. And they can use that towards this tax credit. They can buy the tax credit for this, for that.
Well,
amount.
I'll take these questions
That is correct,
offline
okay.
then, because I'm still.
And
a
it
little
has
bit
to do with the
confused.
entity level. So it's a pass-through paying at the entity level, not at our individual income tax level. So,
and maybe I answer my own question, Jonathan, if you're still online, because I know that we couldn't pay the student scholarship organizations at the entity level. We and I had that discussion last year. So in your professional opinion, you could not do the rural hospital tax credit program at the entity level. Is that correct?
I would say you can, both of the credits, the SSO and the rural hospital, they can be done at the entity level. If you look at the regulations that DOR promulgated for House Bill 149, this specific situation is addressed in there, and there's guidance in there. I think there's some open question on the federal deductibility of this, but it shouldn't impact the state legislation.
Well, the chair is thoroughly confused now, but thank you for, well, I'll take my questions offline. The gist of the program is that tax dollars are being redirected by Georgians and helping our rural health care. Those hospitals that are in most desperate need of help. Is that not correct?
that is correct. Yes, sir.
Okay. Does anybody have any better questions than I did for the author of the bill? Is anyone in the audience that like to speak for or against the bill? Yes, please. Come join us at this down here, please. And if you tell us who you are and who you represent, please.
Good afternoon. My name is Lamisha Hunter Kelly, and I'm with Effingham Health System in Springfield, Georgia. And I just want to say thank you for this bill for hospitals of our size, hospitals such as us that is in need. We use those funds. For instance, we did a Meds to Beds program. We have a cancer treatment center. We have a pediatric center. We do not utilize these funds for operating, but they help with our capital, our infrastructure needs, and without those dollars, we would be, looking for other resources. So we thank you. Our cap was met in September when we thought our cap would be met later on, and we anticipate our cap will be met in July, August this year. So we would appreciate a favorable vote so that we can get those additional resources to our rural hospitals. Thank you.
Thank you for your testimony. Anyone else in the audience like to speak for or against the measure? Hearing none, that was a hearing, no further questions. That was a hearing only. So I don't think there's any other measures before the Ways and Means Income Tax Subcommittee. So this meeting stands adjourned, and we'll turn it over to Chairman Newton, I think. Jonathan, I'll call you later. Don't leave. I gotta leave. Don't leave. Good government. Good government. The chairman was really committee. How you doing?
Somebody was talking about you a few months ago.
Oh, no.
Speaking well.
We are now. Okay. All right. Can I have your attention? We'll call the meeting of our tax revision subcommittee to order. If you will, we'll start with, you see at the bottom of the page, the three bills at the bottom of the page. Oh, somebody asked. We'll start with House Bill 1038, Chairman Cooper. Yes, ma'am. Yes, right there. So will be a first hearing. So look forward to that.
Well, thank you, Mr. Chairman. This is a first. Okay, turn it on.
Is she on? You're okay.
Okay, thank you, Mr. Chairman. This is the very first time I've ever been to Ways and Means. Usually I don't deal with money. I'm not on appropriations. I would give it all to healthcare. And so, but I am here with a bill to help get healthcare to rural areas. And so we have had a tax credit for physicians that they could apply for if they worked in rural areas. And this would expand that to include dentists, nurse practitioners, and physicians and PAs. It's a $5,000 a year tax credit for 5 years. They have to apply for each year. They have to live and work. They have to live in the rural area, not the county maybe they work in, but one that is adjacent to that county. If they leave, of course, they can't apply for it unless they've been gone for 3 years and come back to work in the rural area again. We define rural county means a county in the state that has a population of less than 50,000, according to the U.S. Census of 2020. However, if it has a military base in the county, they do just, subtract the people on that military base to consider whether it's a rural county or not. It can't go over $5 million a year, an aggregate amount that could be given out. And that's for any calendar year, and the commissioner shall promulgate the rules and regulations necessary to implement the code. And it sunsets in 5 years.
Questions from the committee? Did someone, number 3?
Let's hope I can answer it.
If I recall, the purpose behind this tax credit was to help the help us hold on to our Georgia's medical students when they go and practice in the rural areas. If they love us like those of us that live in the rural areas love it, then hopefully they'll settle there, and it would keep us from training doctors and having them go out of state. Our Georgia trained doctors would be more likely to stay in Georgia if they have this experience or not. Does this have anything to do with that?
Some of you that have been, I think there may be another one, reimbursement, tax credit. This is, and I'm not sure about that. I don't have somebody from legal here. I don't think the two are the same.
Okay. So this one doesn't pay someone that that's a preceptor for a medical student.
No.
Okay.
This is someone actually practicing. It's to keep
So
the
it
physician
definitely
or
is
the nurse practitioner or the dentist that's already working there and living there to
Right.
keep them working in the rural area.
So we're just holding on to what we got.
Holding on to what we got.
Thank you.
Well, and hopefully that it will
Enticing.
encourage other physicians maybe to go, and they use this in the first 5 years, our dentists, our PA or so, that they might use this in the first 5 years that they're establishing a practice in the area. When having set up a medical practice for my husband, times can be lean until you have you build up your patient base and all. So it could help us have people come and work in the rural area.
Thank you. I just wanted to know which bill it was. Thank you.
Right. I do believe there is assistance for those in all these fields for helping repay their loans. That's very
Right, that's-
carefully. So I think the effort to get and keep providers, physicians, and this includes dentists, PAs, nurse practitioners, to get them to rural areas and keep them. There's assistance with student loans if they have them, which most do. And then there's this, which is a direct tax credit.
Right. If I remember correctly, we used to say we would give money for when they were in medical school. And we were terrible restrictions on it, on the loan forgiveness. They had to decide on what specialty where they were going in their first year. And if they didn't choose that specialty and stay in that, they had to pay the loan back at 3 times what they had borrowed. And that was ridiculous. And especially since we tend to need the people to make that decision after they've chosen where they want to go in residency. And also it's after residency. I mean, when they really decide where they're going to live or not. So we ended up moving it to the residency part where they were making the decision and would make a commitment to practice in Georgia. But that is a different loan procedure or loan forgiveness procedure than this is.
Thank you, Chairman.
Thank you for including dentists in this. You know what a hard time we've been having in my
Oh.
area to get a dentist to come.
Right.
And
And dental health is so important to your overall general health. and can lead to severe complications. And we have children that go without dental care, and one of the reasons they miss school, and one of the reasons people go to the emergency room often that don't, have a dentist to see, is because of dental pain and from abscesses and all. Used to be the number one thing at Grady in their clinics. It was so bad that Grady ended up going down to one of the Catholic charities. They have a clinic near Grady Hospital, and Grady helped pay for a dentist to work in there, because then they could send them to that charitable organization rather than them being in the emergency room. But it was like the number one reason for people coming to the clinic, to the emergency rooms and the clinics, for non-emergency problems.
Vice Chairman Smith.
Oh, dear.
Thank you, Mr. Chairman. You're talking about 50,000 or less in the counties. I wonder how many counties we have with 50,000 or less.
Okay, it's a bunch. I mean, it's one of the, I don't have any idea about
Yeah.
the number, but it's a significant, pretty significant number. I can find it out for you.
No, Oh, majority,
Is it the
okay.
majority?
All right, just
Right.
curious.
Well, and we have so many, we wonder why rural hospitals are closing. It takes about 45,000 people to support a full service hospital. And we have counties where there's 2,000 and something people in this one, and 4,000 and something in this one, and all. And even all around it, they don't come up to 45,000 people to support a rural hospital. And that's one of the reasons you've seen many of them close, because the surrounding counties and the county itself can't support them.
Same mic. Chairman Cooper, how long has this tax credit been in existence?
I don't have any idea. This one, the new part is, that we're adding on for physicians. I don't know when it started.
Okay. Do you know if it's been fully utilized in previous years?
Don't have any idea.
Okay.
But this certainly opens it up to a lot more people to.
Yeah, I was just
utilize
wondering if people know about it, since we have a problem.
That's
And if it's not being fully utilized, maybe there's some
Right.
way we can get the message out.
I can find that out for you. Because that's a problem with so many of the things that we have, that people don't know about them and don't utilize them.
Thank you, Mr. Chairman. Madam Chair, I think my questions are more technical, but it looks like what we do is we kind of do a sunset, respecting that 5 years for the original legislation, if you will, or original code. And then we start the new concurrent, so to speak, or how am I'm trying to understand. I know we define rural county a couple of different ways in here. So in section 1 versus section 2, and we run section 1 through December 31st of 2027.
Well, and I had a
And,
question. You don't have legal counsel that comes with you here?
We normally do,
Okay,
Madam Chair, but I
because
think
I
he had
asked-
double duty, so.
Because I
um,
asked about that.
I thought
about
you
the
might
difference.
know, that's all. It's
No,
just a
I asked
technical
about it,
question.
and they said this was the way it was supposed to be written, and knowing nothing about ways and means, but if you want me to before, I will check on that and make sure it's, because it looked like to me, since the second part only did not include physicians, it looked like to me that it was leaving physicians off, but I was told it was crafted the right way. But I will run it by you if you think it's not crafted the right way.
No, again, I didn't say that. It just was a technical question,
no.
more so. So we'll get that answered, Madam
Okay,
Chair.
thank you,
Yeah,
because
if
it's
you don't-
important.
I thought, yeah, it is. It
So-
is. It is. Thank you.
Thank you. And I guess the follow-up question would be regarding lines 83 and 84, where it says it shall not exceed 5 million. I believe that would go to Representative Representative Rich's question about, do we know how much it's been previously?
I think we just said, no, I don't know.
I mean, I'm just saying, preparing for the next hearing.
Oh,
It's capped, of course.
it's capped at 5 million.
But is we hitting the cap?
Representative Williamson.
Yeah, thank you, Chairman Cooper. I support the bill too. I do have some technical questions like Chairman Blackman does, just in trying to read it might be that he's referring to code sections, legislative council. I wish he was here. He could
Yeah,
answer the
to
questions
ask
for us
again.
and clear up just some questions in my mind. And what I'm struggling for heretofore, has it been limited? Is the tax credit been just limited to physicians?
Yes, sir.
And so we're expanding it. And my question is, by expanding it, it kind of goes back into, has the cap ever been hit? Are we going to, the overarching goal was to get the physicians here. And I know
this came out of the rural economic.
Rural Development Council.
Yes. And, there's been a thing lately. We even renamed the workforce development group that's already out there that deals with the workforce in this area, that we had to make it where it was more inclusive to include nurse practitioners and PAs and so forth. And so I think that is why you are seeing these people being added. You could debate whether that's good or not. Nurse practitioners are not qualified to work independently. Neither are PAs to work independently. So, you could say one side is maybe that it should have been left with just the physicians, and then they can hire nurse practitioners and PAs to delegate under them. And then there's other people that just think that they should also be in there, and it comes second. So it's which comes first, the chicken or the egg?
And again, I'm not trying to be critical at all.
No, it's
I'm
okay.
just trying to understand it because obviously the big push was physicians, and we still have
Right.
a small pot of money. And we're going to spread that pot of money along a banquet table, and I'm just afraid that either we need to raise the cap or trim it down.
I have great respect for PAs and nurse practitioners, but they are not as well trained as physicians, in my opinion. There's certainly a difference in how they're trained and what they're capable of doing. And if it had been just up to me, I would have left it with the physicians. And since they do have to work under a physician in an agreement, I could have figured that the physicians, and if we have more physicians, they can hire PAs and nurse practitioners. That is my personal opinion, but I am one person on that rural commission or committee.
Pretty influential.
Pretty influential of that.
Well, I
add.
didn't, I mean, and it's no disrespect to the nurses and PAs, but nurse practitioners have 400 hours of clinical experience from another nurse practitioner that is not somebody that necessarily has advanced degrees or teaching experience, and that's something they pick. PAs, on the other hand, have 2,000 hours of clinical training on a medical under, trained faculty, and physicians have thousands of hours. There is a difference in the training, and that is what, in my personal opinion, makes them. But medicine is a team, and certainly the nurse practitioners and the PAs are important parts of that team. But if you don't have a physician to run that team, then how do the other people work? And so that's why I would have said, in my opinion, I would have left it just with the physicians. But I don't get to run the zoo totally.
It's a team here too, isn't it? Chairman Rich.
I just, I wanted to kind of close this loop that Chairman Williamson and I have been kind of circling around. Is there somewhere that we could suggest that Chair Cooper could get that information about how much has been
Department of
utilized?
Revenue, anybody have maybe a number or approximation? Yeah, because I guess the question is, if it's already been met at 5 million and now you divide it with 3 other specialties, you're going to obviously reduce. But thank you, ma'am. Yes, ma'am.
Yes, hi. It's not been met. It's the maximum has been just over $1 million.
Okay.
Wow.
So,
And we have no way of knowing, whether that's from lack of knowledge about it and that's just this past year or.
No, that's over the last, that's from 2015, 2020. It's been under $1 million. The max has been 1 million, less than 1.1.
thank you.
I would say, this brings up another thing, and sometimes going to one committee can help you. There's a new nurse midwifery school at the college in Milledgeville. Had been one nurse midwifery program. We have so few OB-GYNs in our rural areas that if they can, work with specifically trained nurse midwives, that's sort of a spoke and a center part of thing, we will be better served. One of the things that the college, in talking to the president that met with me, was that for other schools, not our state schools, are paying physicians for the time to mentor their students in their offices, because it does take time away from the physician. If he has a nurse practitioner that's learning to be a midwife and they get really good training, it does take time away from him seeing as many patients as he could. So one of the things that President Cox asked was, could we perhaps go and get a line item asking for about $2,500 a year for a physician to agree in the rural areas in OB to mentor the nurse midwifery students that are coming out of it. However, if the physicians are not using this, then I think I think they need to know about this, that they could apply for this, and that would help with them agreeing to mentor these students. They are limited from the number of students they can take in a nurse midwifery program when they don't have enough physicians to mentor them. So I'm glad we had this discussion, because now I'll be going back to the OBs and so how many of you know about this in our rural areas, and would this help it? Would you take our students? If we didn't give you $2,500 in cash, would you please take our midwifery students in rural areas if you applied and got the $5,000 tax credit? I don't know. We have a real problem with that.
I know it's a multi-pronged effort to
It
solve
is.
the rural healthcare issues, and thank you for your work on it.
Okay.
This has been a hearing only. We'll
Thank you.
certainly thank you for the extra information.
And I apologize for not knowing. I didn't find out I was supposed to come to this until about an hour ago. And I feel like I'm very unprepared, and I'm sorry for that. I will find out the things you know. And it's my fault because I've been working on a little bill, and I'm not going to use the number because we're trying to reduce the number of those, but on the mental health bill. And so I apologize for not being better prepared.
Thank you, ma'am.
Thank you. Okay.
Good job. All right, we'll go on to HR 594. Chairman Smith, if you come on up. Thank you, ma'am. Thank you, Chairman Cooper. Yes, Chairman.
If I may, I believe, Mr. Chairman, that we have added what was intended to be a substitute, but I think was crafted and drafted as a new bill that we would work off of. And I've spoken with Chair Lady Smith about the what it would do ahead of time, and it preserves the original intent of her bill, her resolution rather, and allow us to move forward at full committee tomorrow if the chair and the committee is willing to do so.
Trying to now the version in our available that she'll be working off of. Are you going to read your LC number, ma'am?
I actually I have the 1 and 2 copies here, so I'll be glad to. It's LC 280477. Is that right?
Can we
refresh? Sometimes you have to refresh that. You see it?
Oh, there it goes. Yes.
Pull
Now
the screen down, kind of, sort of, and there's also a little.
So LC 280477. I got it as well.
Yes.
Thank you, ma'am. Thank you for coming to your second hearing on this bill. Look forward to hearing and moving.
Thank you, Mr. Chairman. I'm deferring to the full chair of the Ways and Means. I don't know if I should be presenting or our chair should be. I'm just saying I'm here. Wow, I can't believe it. And I'm fully supportive of what's taking place. So that's my public comment.
I didn't know if you wanted to do a little of the background, Madam Chair, and then,
Just a quick review of the background behind the bill for some that may not have been here or some.
Thank you. And
your goal of the bill.
the background of the bill is that Coweta County last year, March, the end of March, faced what we called a midnight tornado. 170-mile-an-hour winds. Luckily for us, no deaths occurred, but it was total destruction across all economic lines, 3 counties, devastating. We were recovering and take a few more years, but in late fall, a city official commented to me that he wished he had the means available to offer some relief to property taxpayers this year, the year of the tornado, who were paying property tax on something they no longer had. So from the end of March until December, several victims were going to have to pay property tax on a home that no longer existed. And the options were not there for local governments to have any flexibility. And so I was told it couldn't be done. So that was all I needed to hear. So I decided there has to be some different ways to approach it. And during special session, I know that the General Assembly was asked to sanction a waiver on a gas tax relief. And so it gave me the idea to see if there's not a way to trigger with some type of legal language, an ability for a local government at their determination to see if they cannot find a way to give some kind of relief to local governments. And in the end of all of this is I had 2 bills drafted with my limited knowledge. And based on my experience with the committee I chair, Natural Resource and Environment, I believe that there exists a creative and committee knowledge more than what I was trying to present. So I appeal to the wisdom of the committee and it is working. So it's all I can say.
I'll appeal to the chairman of said committee and see if he can give us an update on some, looks like some clean language beginning on line 16. Mr. Chairman.
It's really, thank you, Mr. Chairman and Madam Chair. Appreciate the concept that you brought forward. And really, this just aligns very closely with what you brought in your original resolution. So it's permissive and it would authorize, as you can see, the Board of Education County School System, the ability to do exactly what you said, your folks wanted to try to achieve. So it's a permissive. It puts that question on the ballot for the taxpayers to look at and decide for themselves as to whether or not they want to grant that authority.
Thank you, Mr. Chair, and thank you for that. It is my hope we never have to exercise this. This is a national horrible disaster, but for my community and the perspective of the citizens of my community, this will not benefit us, but our experience and what we went through, I hope can be shared going forward. And again, I hope we never have to exercise it. But if we do, I pray that things work for you. It is still a devastation for us, but this is a pay it forward to the state of Georgia from the people of Coweta County.
Representative Williamson.
Thank you, Chairman Newton, and Chairman Smith, and my seatmate. Thank you for educating us about this, because we've experienced severe disasters in Walton County, and we had a special session because of Hurricane Michael a few years ago. The devastation that caused was just unbelievable. We are thankfully we don't have too many hurricanes, especially one that came from that direction. But we are on the Georgia coast, and we are subject to these natural disasters. And tornadoes are particularly horrific when they get into neighborhoods. But so thank you for this bill. I've got just one, this resolution, just a grammatical point. And again, we don't have legislative counsel here, but help me. I know that you're a pretty good grammarian, but on line 27.
Sorry, I don't have the bill.
Let me read it and see if
Okay.
it makes sense. It says, shall the Constitution of Georgia be amended so as to provide that the governing authority of each county, municipality, and consolidated government and the Board of Education of each independent and county school system in this state shall be authorized to grant temporary, that shall in line 30 should not be there. Yeah.
Is
So
shall be authorized. Does that
it
leave an
starts off-
option still?
Well, as you start off of line
Shall.
27 says, shall the Constitution be amended?
So
Be
it's a
authorized.
duplicate.
So
I
it's,
see,
yeah,
just to eliminate the second shall.
that's what I,
So there's two shalls.
shall the Constitution be amended so as to provide the governing authorities and consolidated government, the Board of Education. I think it's
Actually, I think it's right.
do you really?
Oh, yeah, because it's shall
Well, I
the
asked if you were
Constitution be
gonna-
amended,
Thy
and then
will
shall
be
the
done,
state be
is all I'm gonna
authorized,
say.
the school system be authorized, the county.
Mr. Chairman,
We'll, if I may, Mr. Chair, we'll just,
Wordsmith it.
we'll take a look at that and bring the correct format to full committee in the morning. If you know, if that's
I think that sounds like a,
committee's comfortable with that.
thank you, sir. Richard Buckner.
I am in full support of this, but I want to get educated for the committee. In a situation like this, the county tax assessors cannot devalue property that's been blown away, so people don't have to pay taxes.
I think it's the timing. of
It'd be for
Oh, is that
for the
what-
following year, they can on January 1st. But this would allow it during the year that a March tornado, for example, happened. Property that had been
You-
intact
you
in
pay the tax
January.
For the prior year that you had it, but that partial part of the year that you're in would still be at that higher value, correct?
It is more of an immediate, level of relief is what I think they were looking for in this.
Right. I understand. I just was thinking that.
Miss,
Oh, I agree. I'm not disagreeing. I was just trying to figure out, it just seemed like that somebody would have contemplated this before now and that it would not be so hard to fix. It was just a question. It
This is-
has
this-
no,
In the interest of time, I moved due pass with the understanding that we'll just wordsmith lines 27 through 32 to make sure it's grammatically correct.
Have a motion and a second. Is there any other committee discussion? Not all in favor, aye. All opposed, no. Bill passes. We'll,
thank you, Mr.
Subcommittee will
Chairman,
see you
Mr.
in full
Chairman.
committee tomorrow.
And the committee.
that's,
I think the state of Georgia owes us all a debt of gratitude for this. Thank you very much.
Which one we got now? 76. HR 756. Ladies and gentlemen, we're going to move on to HR 756. Let's see if I can find it on my pad here. Yes, sir.
I've also, there's some witnesses here to testify, but they need to sign in or sign anything.
It's
They are-
not-
Okay.
Yes, sir. And if you'll tell us which LC number that is, and you have the floor.
Yes, sir. This is LC 441920. This was the bill as filed. There've been no changes or amendments to it as of yet. So 441920.
Okay. You have the floor. Yes, sir.
Thank you,
Representative
Mr.
Layton.
Chairman, members of the committee. This is House Resolution 756. Similar, I think, to the last bill, it proposes to call a referendum election concerning whether the Constitution should be amended to create a new class of taxable property for ad valorem tax purposes, and that's basically qualified affordable building projects. I'll try to just set up the issue, a couple thousand feet up, and then there's some witnesses who would like to testify, I think can sort of drill down more into some of the details of the issue here. But so obviously, I think what we're here, this would just sort of be the beginning of a conversation to see if the voters of the state of Georgia would authorize us to proceed further into that conversation to determine whether these types of projects should be subject to their own set of uniform rules and procedures and assessment dates, just like, other classes of property are entitled to their own rules and rates and so forth. This kind of, so that's basically the bill in essence. It would just call a referendum election for this November. And then if it were to pass, then we would obviously have some more work to do of actually approaching the the more detailed issue of, well, what are those rules and procedures and assessment dates and methods going to be? Here, we're just trying to make sure that's something we can constitutionally do. So just a little background on these projects actually kind of stem from the Reagan years, when sort of affordable housing was taken, it was in a sense privatized. It was taken from government ownership and government construction and government management and put in the hands of private business. And I think the reason we're now having this conversation is over the last 20 years that we've had a similar program in Georgia. We feel like the assessments on these projects, because they are kind of a unique type of development project and real estate ownership, are being unrealistically and unfairly valued by many assessors across the state. And I know it's always sort of chic to pile on the poor assessors' offices. I've represented counties, and I know how hard those folks work, but I think that in some cases we believe not getting it right, and they're not being consistent in what they're doing, and they're not even following state laws that the General Assembly has enacted over the last 20 years in an effort to bring some consistency and clarity to the issue. And so at this point, we've been advised by DOR that a constitutional amendment would be needed. So from the beginning, basically in 2000, when the state adopted its own law that kind of provided for this kind of program, these sorts of projects, the assessments in our view have sort of been somewhat inconsistent and at times just unrealistic and unfair. And I think the reason is because the nature of these projects are that the rental that can be charged in them is limited by law. That's the whole gist of the project. And in exchange, tax credits are afforded to people who invest in the projects, but that's not cash flow. And so when the projects are taxed based on income approaches that assume full market rental rates, that's just not what these projects are doing, nor is it what they legally could ever do. And so it results, we believe, in an overvaluation that stretches the financial capacities of these projects to support themselves and remain viable going forward. In fact, in some places, the values that are set on these projects because of the methodologies used result in overmarket valuations. So it's almost worse than the project that actually could charge the rental that it's being assumed that these projects could charge. So we're trying to make sure we don't, in that policy, discourage new construction, but this isn't really so much about promoting affordable housing as it is really about being fair to the ones that currently exist and making sure they can remain viable and operate properly. So as I mentioned, there have been some attempts to clarify this issue of the law at least 3 times in the last 20 years. But in some cases, we feel that assessors' offices are not really following the law, or they're applying it incorrectly. They're including the credits in the assessment, which is, we think, sort of like including your mortgage on top of the value of the house. And so it results in inflated assessments. And so the industry has talked to DOR about this repeatedly, and Revenue has said at this point, you're just going to have to amend the Constitution because of uniformity amongst different classes. You're kind of limited in taking into account some of the real world realities that these projects face, mainly the limits on what they can charge to cash flow or get rent. So we have taken Department of Revenue, their advice to heart, and that's what's resulted in the presentation of this proposed resolution. So we believe that if this could be presented to the voters and the voters do authorize the separate class, then we would then start having the conversation about what are the appropriate rules to make sure that these projects are being assessed fairly and consistently and in accordance with the reality of how they exist and function.
We all want equal assessments. Representative Rich.
Thank you. Thank you, Representative Leverett. Do you know the code sections that attempted to address this issue?
I do not, but I can certainly get those for you.
And do you know why those statutes were not effective?
Well, I'm assuming it's because there's some confusion over how they can be applied. Again, because of sort of so I would say unique nature of these kinds of projects. I think some of my other witnesses can probably drill down into those details with you, but basically we believe they're including as income and as value things which really are not in the real world, and certainly which don't produce any cash flow for us to pay expenses as well as the tax amounts being assessed based on those assessments.
Thank you. I can't imagine.
But I can try to get that information for you.
Representative Buck.
So am I to assume that the definition for qualified low-income building projects and the rules and regs of how those are supposed to be developed and run will be done by DOR?
Well, I think that would be a conversation we would initially do as an enabling statute if the referendum were to pass.
That was my next question. So that'll come in the statute if this passes.
Correct. Yes, ma'am.
But it will be in conversation with them, I assume.
Absolutely. Yeah.
Okay.
At least that would certainly be my intention.
Other members? Okay, we have some folks. I don't know if anybody's online. Jet, Tony, why don't you go to this one? You can stay right there.
Okay.
All right.
Chairman, members of the committee, I'm Jet Tony, representing the Georgia Affordable Housing Coalition, who are the developers and vendors and investors who are the engine behind the state's most successful affordable residential construction and maintenance program over the last 20 years. The first thing I want to do is thank you and your predecessors for having attempted 3 times to resolve this issue and to bring clarity as to how Section 42, IRC Section 42 affordable housing is assessed and valued for tax purposes. Representative Stevens, Chairman Stevens, is the only member in this room who was around to vote for the original state credit, which was passed to mirror the federal credit. So thank you, Chairman Stevens, for being here and for doing that. This gentleman right here was also a yes vote on that, and so was 99.5% of the legislature. It was near unanimous. And each of the times, the 3 times the legislature has adopted legislation, the votes have been nearly unanimous. Representative Rich, the 2 of the bills were, my lay term, were struck down in appellate courts as being violative of the uniformity clause on taxation. And then the last bill that you adopted in 2017, and most everybody in this room voted for that, has been upheld by the Supreme Court. Still, the problems persist. I know we're on a bit of a time crunch, but our next witness is a taxpayer, and he will speak to what has been his experience in a couple of counties. His experience has actually been in multiple counties, and he can speak to that. But here's a situation where for 20 years, the partnership that the state, federal, and local governments enter to create quality of sustainable, affordable housing is jeopardized by inconsistent, unfair, unjustified assessments on properties that are income capped because the rents are capped under state and federal rule and law. So it's impossible, as the author said, for the property owners, the taxpayers, to generate new income to meet these tax burdens that are placed on the property. And I agree, assessors probably do get a bad rap. And that is why, if the voters will approve this constitutional amendment, the ladies and gentlemen of the legislature will be able to prescribe what is an appropriate methodology across the state for the valuation of these properties. I've never stood before the legislature and said freedom of Western civilization is in jeopardy if you don't pass this bill. But we who are in the industry, those who are in the industry, know that the program is unsustainable if the property owners and investors are paying 3, 4, and 5 times what they were paying a year before for their taxes. It's not market driven. And again, the assessors are using all manner of methodologies and in some instances using a combination of methodologies. So in each of the 20 years, just about in every year since the legislature passed the state credit, that was 2000, it was part of the One Georgia Economic Development Program. You remember that. We began to see assessors increasing the valuation of the property. And it exploded after about 2010. We began to see a cottage industry of assessor consultants spring up and move around the counties and say, we're going to show you how you can expand your revenue for the county by assessing these properties at a higher rate. In each of those years, this coalition that I represent, its leaders have met with representatives of the Department of Revenue. And we thank the department and those commissioners through the years for meeting with us. But at no time did we ever leave one of those meetings with satisfaction. But the taxpayers did not leave with satisfaction. And as I've told my clients, that to be fair to DOR, until there is a constitutional amendment, DOR cannot rightfully just tell assessors what to do. And that's why we come to the legislature. So now Chuck is the only person I see in the room that I know from DOR that has been in a lot of those meetings, Chuck Nazarian, and we appreciate his time. But when DOR tells me year after year after year that there's no solution in sight until you can separate these properties as a class, and the legislature prescribed the methodology, will you see any type of consistency and fairness? So when I hear that, I bring it to you. And that's where we are today. Mr. Chairman, with your permission, I'd like to introduce Mr. Ken Blankenship, a taxpayer and developer of many properties around the state. And Mr. Blankenship is not only a taxpayer, but he's also the volunteer chair of the Georgia Affordable Housing Coalition. Thank you for being here, Mr. Blankenship.
Thank you, Mr. Chairman. Thank you, Jet. I appreciate your time today, and Chairman Leverett, I appreciate you putting forth this resolution for consideration.
I appreciate you promoting me to chairman. Thank you.
It is it's a battle that is extremely hard to fight on a daily, weekly, monthly, annual basis. But the inconsistency that we currently see amongst several counties, and specifically a lot of metro counties, there are a few rural counties that are involved in this process. And even though I believe there are legitimate statutes that they are supposed to follow, they just refuse to do so. And a great example is I own 2 properties in DeKalb County that are 94 unit senior 55 and older communities. They serve a great purpose. The article that is passed around, that Jet passed around to you, features a resident of one of my properties in DeKalb County. I have an 88 unit property in Fulton County that is virtually the same. It's just 55 and older senior community. So we're only talking about 6 units of difference in the total. My tax bill in DeKalb County on one property is $254,299. the other property is 248,561, and Fulton is 37,097. And it's strictly from the approach that DeKalb uses and the approach that Fulton uses, totally different. Fulton understands, I believe, the process for affordable properties. DeKalb doesn't. We've had the issue in Athens, Clark County. We've had the issue in Bartow County. We've obviously, you all have probably heard of Lowndes County and the problems we've had in Lowndes County. So the importance of the resolution would be to allow the legislature to say, we want to class these properties separately from everything else. And you provide the method that all the assessors would value our properties. I believe if you had 100% of the assessors sitting in front of you today, they would probably say, we'd love to have some method, some unified method and done by the legislator to tell us how to do this. Because at this point, the arguments that we get, this is our interpretation of what we're reading. And it's hard to argue that. This is your interpretation. My interpretation is different. And so we go to court. We spend legal fees. The county spends legal fees. Lowndes County has spent in excess of $1 million on an additional $80,000 of property taxes. Why are we doing that? Why is that? Why is Lowndes County doing that? They're just set in their ways and they want to get it done. DeKalb's the same way. We feel like that there's so much money, useless money being spent on legal fees by the county, county governments, along with what we're having to spend as owners. If I had to pay these taxes in DeKalb, my property before taxes, after debt service, my property cash flows $92,000. So if I had to pay $248,000 in taxes, you can see I'm having to fund the property out of pocket. Ordinarily, we had planned for, and when we asked the county ahead of doing these type projects, we're supposed to get a methodology from them in which they would assess the property. They provide that to us. We have to provide that to the Department of Community Affairs in our initial application. Those methods yielded an estimated tax bill on my DeKalb property of about $58,000. So if I'm cash flowing 92, I pay my taxes of 58. I've got some, cash flow that I'm able to set aside and use for the property upkeep, whatever that may be. But I can't. These properties are not sustainable under the methods that they're using. So I think it's important to wrap this up, and I could talk forever, but I think it's important that we have to. That's exactly it. I've been afraid of Representative Martin for a long time. So anyway, War Eagle, by the way. What was I saying? See, you made me lose my train of thought there, Chuck. Yeah, I'm about finished. I just think that our assessors have to have a formal legal guidance from the legislature on how to value these properties so that we can continue to build them, because Lord knows the state needs them. They are in need of affordable housing. So that's all I have. Thank you. Thank you very much.
No, sir. Yes, sir, please. Go ahead.
I just came from chairing another man. I just can't, Mr. Blankenship, Ken, Coach Ken. I appreciate you. I'm sorry I got here late. I got, communicated with you several times on this, and interested to hear more detail about that. And it was just, interrupting you out of sport because of the fine man you are. But I'm interested in the issues that you have. I'm not sure I concur that this is the right manner by which to fix them. But thank you for doing that, and thank you for doing that, and go Dogs.
Other committee members.
Bunch of years, right?
Yes, sir. Representative Rich.
Yes. Representative Leverett, have you spoken with ACCG about this? Oh,
Just very briefly, we've discussed it, yes.
do you all have a position?
We're neutral, but we'd be glad to. It is certainly a problem, and it has been for many, many years, going way back, on how you value these. And the whole crux of the argument is, do you include the value of the upfront credits or not? And assessors a lot of them are apparently including the upfront value of those credits because it's front loaded, right? Get the developers to do these projects, they get all these credits, and I believe they're transferable. If I'm not correct on that, let me know. But you can sell off these credits and get your money up front. So you got your money in hand, and then of course, then you got to maintain the property for a long period of time. And that's when the cash flow issues come in, because they're taxing these at what may be a similar type of apartment complex. And it's a free market apartment complex. And maybe even higher, I guess, because if these tax credits on the front end are so lucrative and they're capturing that in the valuation, because they're using an income approach to valuation, then it could actually maybe be higher. But it's all about how you value it. Definitely, we need some standardization across the state. I concur with that.
Are you familiar with the legislation that has been attempted in the past?
Yes, I've been involved. I've been there for all three of those.
Would you be
bills.
able to give us the code section for the one that has been upheld? Anybody?
I don't have it off the top of my head. I'll let him do it. He's
Yeah,
got it.
Leverett. Right.
Yeah, you can, either one. Yeah, you're good.
Representative Rich, the code section that's been amended 3 times is 48-5-2.
And are you familiar with why it's not working?
Yes, ma'am. I'm a practitioner in this area for about 20 years. So I represent a lot of these developers. And the problem, in my opinion, is the first stab at this was very, very clear, very basic. The legislature said, excuse me, tax assessors shall not consider any tax credits.
Okay.
Problem is, the Supreme Court said that's unconstitutional because you're creating a separate class of property. So that's what this amendment would do, is create this permissible separate class of property.
Okay.
The other time, the last one was House Bill 954, said that they have to consider the rent restrictions and the higher operating costs. The Supreme Court upheld that bill. The assessors misinterpret the Supreme Court's decision. That's where we're at.
Yes, sir.
Wait, if I can, so help me out with this for a second. Is they thought that telling them they couldn't consider the tax credits created a different class of properties. That was about, they don't, the tax assessors aren't going with that. I mean, excuse me, we don't have to do that. So then you got the change that you mentioned. So what are they assessing this on? I mean, are they doing the replacement? I mean, are they using the income? I mean, just say your business, are they using the replacement value? Are they using the income? Are they using a combination? I mean, if this was, what are they doing differently in the assessment of this than they would a commercial?
Right. So in the last 10 years, we've seen every variation of every methodology. Income approach using market rents instead of the restricted rents.
Well, I mean, they can't use the income. We have a lawyer here. I mean, one of our, it would be my opinion that they can't use what they think you can rent it for. They have to, if they're using the income approach, they use your income. You give them the statement.
Their stated usage is market rents, what a market rent property would rent for.
And you failed on appeal?
No, I
You failed to win that?
succeeded on appeal at the
Okay.
Georgia Supreme Court 2 years ago. And
Then
they
you
misinterpreted.
win and we
And it
don't
just
have-
went to the Court of Appeals last month, and they
Okay.
again said you have to consider it. And that'll probably go back to the Supreme Court. So it's this dire need to have this set by the state.
Well, I mean, I don't know where we're at, but for the purposes, because it bothers me coming from local government. And I appreciate Mr. Blankenship. I mean, he and I, all joking aside, I mean, I understand he and I have community, but it bothers me creating a separate class of property, because having been in local government, there is a certain amount of services that go with the rooftop, right? I mean, if you don't get a certain amount of tax to do it, I mean, you know, Alpharetta, Rawlsville, Sandy Springs, Atlanta has a comprehensive plan that says for every 10,000 people, we have this much park property, this many police officers, the fire protection, so forth. So it worries me to create a second class of property, but what worries me more is you're saying that, so the tax assessors are going by it because the case is not final yet.
The 2019 case was decided by the Supreme Court, and it's final, and it said the last iteration of the restricted valuation methodology is constitutional. That didn't go to the US Supreme Court. That's
Well, it's not,
valid.
I mean, I'm talking about, I thought you were referring to the Georgia Supreme Court is where we go,
Yeah,
right?
Georgia Supreme
Yeah.
Court.
So there's a case ongoing on appeal that you have an income valuation that they're using projected rents, anticipated rents as an income approach. And you appeal that and said, no, this is what we're getting paid.
This is by law.
And you won, then you lost, then you are not sure because it's still at appeal.
It is not under appeal. So what happens is each individual county assessor has their own methodologies, and they've shifted over time. The latest that is being performed by DeKalb County is to switch all tax credit properties to only the cost approach. Some of these properties are 20 years old.
You get to appeal that.
We are in active.
Yeah, I mean,
litigation.
you get to appeal it. They don't get to decide. I mean, correct me if I'm wrong, right? Or the revenue commissioner, I mean, you can put in your appeal a different methodology than they choose to use. Can you not, Commissioner?
We're in active litigation.
Okay, well, that's
But
what I'm
going for 20 years.
Yeah, that's
Same
what
issue.
I guess that's what gives me, I mean, I see, y'all been over here and I just kind of zoomed in, whatever, but this is important to them. I know it is, but I'm hard pressed to go and amending the Georgia Constitution while there's active litigation going on that may fix it. Because when we create a second class of property, that is from now on and forevermore. And who's to say they can't choose to do that a little bit different too? I mean, they treat it different. So where do you see, how much time do you see in this litigation before it gets to the end?
Been going for 20 years. I wouldn't. be
Well, I mean,
surprised
this
if it
case,
went 20 more.
this case hasn't been going for 20 years.
Various cases in various different counties, various approaches.
Representative Leggett, yes, sir.
Can I address that concern, Representative Martin? Sorry. I'm probably the newest guy to this issue, certainly of the witnesses that have testified and probably of the people at this table. But from what they've told me, they have tried to utilize existing administrative appeals and judicial appeals over and over and over again, and it doesn't seem to be working in the sense that nothing's changing, that the valuations are still skewed and aren't really in touch with reality. Certainly they do have these processes to argue that it's being done wrong at the local level, but there's a pattern of them not really resolving anything through that. And it seems to me that the whole reason is there's a mindset of, well, we have to do this uniformly. This is not a separate category of property. So we're sort of stuck with what we, the assessors, are doing. And I think the assessors truly believe in good faith they're doing it right. And I think the only way to address it is to get a separate class and then legislate what those methods will be. And I think when it's a separate class, I think the assessors will then will feel more comfortable about complying with the statute and will have less issues. At least that's my read of it.
And that's, whenever you're ready to go, I can do this offline if you want, Mr. Chairman, but
No,
that's
I wanna
what
hear
I
this.
want to get to. If you're a hotel and you have a flag out there, I mean, there's been litigation in Georgia and in other states that they would take a 100-room hotel that had a Marriott Courtyard sign on it and a 100-room hotel that was Joe's Inn, and they would, across the street from each other, and they would tax them differently because you're a Marriott and you can book online or whatever. That's blatantly unconstitutional in Georgia. You don't tax intangible values, goodwill, name, et cetera. And it took a while, but they won. So what I'm getting at here is the methodology for using the income approach is how much you get, not how much they think you can get, not what the market rate is. It's not like you're taking less and taking some kickback somewhere else, right? I mean, that's what you're renting it for.
But with all respect, my understanding is the market, the income approach is from an assessment perspective, is not what you're charging, because you may be a nice guy and just charging $10 a night. It's what you could charge based on market. And see, they can't do that. It's like the hotel that legally is prohibited by federal and state law from charging more than a certain amount is being valued based on an assumption they could charge far in excess of that, which they cannot do. And
Well-
that's the thing that I think makes this somewhat unique and frankly worthy of a separate
Well,
category.
here's an appeal that I know, here's a evaluation I know one. They did that with flag hotels. And they said, you can charge more, you're a Marriott than, Bill's Inn. And that they won that appeal because they said, no, you can't tell me I can charge more because I have this on the side of there. I don't know. I'll take it offline. I'm just trying to figure out why what I thought you said is in the latest case, the court's ruled for you.
Multiple
But-
cases.
Well, I'm not talking about multiple. I'm talking about the one now on the income approach based on the last change.
Correct.
Okay, but it's still under appeal.
The case is final. It has two holdings. The holdings say you must consider the rent limitations and higher operating costs. Another part of the case says you may consider the cost approach. The county's interpretation is we shall use the cost approach. They're
And that's my question. Is somebody, I don't know if Frank, I mean, it says you may use the cost approach. Does that not mean that an owner can come in and say, I choose to appeal and use my income approach and it shall use the revenue? Correct me. What would you say? The ruling said it's you shall use the actual rent. That works whether you're, that works where does that not work where the owner or the county is doing? If you're going to use the income approach, you shall use the actual rents. Is that not true?
Shall apply, is what the statute says, but the rulings in a part of the opinion that is not a holding of the case says in certain instances, the counties can consider the cost approach. So in some counties, they are now switching to only the cost approach on property that's been operating with reliable income data for 20 years.
If I could say, I would just say, Representative Martin, if this were the first time they'd taken this issue up, I would say, yeah, let's let that run its course. But they've trod this ground, my understanding is again and again and again and again, and it doesn't seem to be getting them anywhere. And I think it's because of the mindset of the assessors, and I understand them. And I feel like we at least need to let the voters make a decision. To your point, we can't create the class here. That's got to be done by the citizens of the state of Georgia. And I think we ought to just at least put the issue to them and see what they say.
Representative Labor, this may be way out there in left field somewhere, but is there any possibility of making these qualified, low-income buildings a homesteaded property because of their
I doubt it
definition?
because it's owned by one person, leased to others.
Yes, it's owned by a limited partnership.
Exactly.
Got a corporate entity involved.
And it would take some language to do that. And my point is if you're looking at the increased assessments over the years, there's a mechanism already out there that through the homesteaded side that will take care of increased assessments every year because your homestead exemption follows it dollar for dollar on floating homestead exemptions. Just a thought.
My concern would be, I don't think they would qualify for a homestead.
Yeah,
Because
homestead's
the
an
tenant can't
individual
claim it. You can't
person.
claim homestead in
True.
a rented property.
If you bought a house in an LLC.
That take another constitutional amendment.
You bought a house. in
We
an
can go work
LLC,
on that though, Mr. Chairman.
get a
I'm
homestead.
second signer. Well, guys, ladies and gentlemen, we're at a almost happy hour. So I want to appreciate everybody for coming, and this meeting is now adjourned.